All right. So we're good, Dallin? All right. So we're going to go ahead and get started. Okay. So today we're talking about the Corporate Transparency Act and the effect that that act will have on small businesses specifically. Okay. So to get started, okay, those of you who attended my previous class have seen this slide. Kate Jones isn't here to make me change it. So why should you trust me? Who am I? Why do I know anything about the Corporate Transparency Act? Well, I'm Paden Hanson, okay? You should trust me because I'm named after the good guy in the movie Silverado, okay?
Are you really?
Yeah.
That's a good show.
Yeah.
It is a good show.
The guy who guns down the bad guy in the end, okay? I've not done that personally, but I like to live vicariously through Kevin Kline here. I've been practicing for 4 years now. I've helped lots of clients with their small businesses, and then, small business all the way up through getting quoted on New York Stock Exchange, NASDAQ. So that's kind of been my career thus far. So why are we here today? Well, we'll say this 9 times it feels like. Okay, we're here to learn about the Corporate Transparency Act, okay? Understand how the Corporate Transparency Act affects you, and apply that learning so you know what to do as the act takes effect, okay? So our agenda, we're going to talk about kind of, the purposes, the origins, the rationale behind the Corporate Transparency Act. We're going to talk about who is required to make what's called a beneficial ownership filing under the Act, who's exempt from those filings, and what type of information is contained in that report, okay? So a lot of the information that I'm going to present today comes from this small entity compliance guide that was published by the Department of Treasury by one of their regulatory arms called the Financial Crimes Enforcement Network, or FinCEN. Okay, so they published this guide end of September. There's a QR code for those watching online, so you can access it. For those in attendance here, we have some copies of it floating around. Okay. So, Corporate Transparency Act, okay, first enacted on January 1st, 2021, largely along party lines, okay, overwhelming Democrat support, not a lot of Republican support for the law. It's an expansion of certain anti-money laundering laws, okay, so the whole idea of the Corporate Transparency Act is to kind of build a network of who owns what businesses, so if you're being investigated for money laundering or funding terrorism, they can see what business you're a part of, what other businesses you might be a part of, so they can kind of be more aggressive and more kind of encompassing in the way they're investigating those types of things. It requires most existing and new businesses to file a report with the federal government regarding their beneficial owners. Okay, and we'll talk about what beneficial owners are. And so, yeah, that's what's going on here. Okay, it also requires company applicants to file with the federal government. So company applicants, okay, that's attorneys largely, CPAs as well, people who form businesses who actually file the paperwork. We have to disclose that we're doing that. Okay, so who's a beneficial owner? Okay, basically there's 2 ways that the Department of Treasury considers you a beneficial owner of a company. Okay. The first is if you exercise what we call substantial control over a business entity, okay? And then the second is maybe a little bit more intuitive. You're a beneficial owner if you own at least 25% of a business, okay? You can be both a substantial control person and also be a beneficial owner by virtue of the ownership interest that you hold. So companies can have multiple beneficial owners, larger companies, it could be 10, 20 in some cases, right? So that's a beneficial owner, okay? So under that first prong, right, exercises substantial control, okay? Basically there's 4 categories of, or kind of buckets you can put for substantial control, okay? The first is you have an individual who is a senior officer, okay? So in a corporation, okay, we've got board of directors, so directors would fall under that category, CEO, CFO, COO, those types of people who are making decisions about the direction of the company, okay? Individuals who have authority to appoint or remove certain officers or a majority of the directors of a company, okay? So In a corporation sense, okay, you might have a shareholder who has special stock that gives them the authority to appoint one or more directors. Even if they're under a 25% ownership threshold, their ability to direct the affairs of the company, even though it's indirectly, would make them someone who has substantial control. Other individuals that are important decision makers, okay, so in some enterprises you have that one guy that knows how the thing works, and so we rely on that person to make a lot of decisions because they're the only person who has the expertise. And so that's another example. And then we kind of have a catch-all category, right? An individual that has any other form of substantial control over the company, okay? So again, kind of the abstract, taking a couple steps back, the idea is if you are someone who can realistically influence the direction of the company, odds are you would be someone who exercises substantial control. Okay. So what's an ownership interest? Okay, so some of this is kind of intuitive, right? So equity, okay, equity can come in lots of forms. That could be stock, that could be LLC interests. In some instances, you can have voting rights that are independent of equity ownership. In the LLC sense, that can be capital or profits interests, certain convertible instruments. So if you have debt that's convertible into stock or into LLC interests, those are all things that we take a look at to see if you are someone who owns at least 25%. Some of this ownership, I've had clients ask me, well, what if I own 12.5%, my spouse owns 12.5%, okay? We still don't have a lot of guidance on this, okay? But in other areas of the law, we've seen kind of an assumption that your ownership interest, also includes ownership interests of immediate family members. So if you own 12.5%, your spouse owns 12.5%, you're both likely to be considered beneficial owners as individuals who essentially own 25%. Okay. But not everyone has to disclose that they're a beneficial owner, or maybe more accurately stated, companies who are required to file this report don't have to disclose all beneficial owners. Okay, so we have a few exceptions here. Okay, one would be a minor child. Okay, so I think we can kind of understand that minor children aren't usually the kingpins in a money laundering scheme, and so FinCEN has made the decision to exclude them from needing to be disclosed, so long as their guardian or their conservator, their parent, is disclosed as a beneficial owner. Nominees, intermediaries, custodians, or agents, okay, so people who might have a lot of influence over certain business decisions and have a lot of authority or control, but they're only doing it on behalf of someone, okay, so the example I have for that is I have a client who's I help out on the estate planning side, pretty significant net worth, and when I go to meet about his estate plan, I don't meet with him, okay, I meet with his people, right, okay, so it's his people that are influencing the decisions of the organization, but they're really just doing it on behalf of their boss, essentially, right, and so they wouldn't be considered the people with either ownership interest or substantial control. They're just acting on behalf of someone else. Employees that are not in that officer, director, kind of general manager role are often exempt. Inheritors, meaning if your ownership interest is a future interest, okay, meaning you suspect or know that you will inherit significant control of a company in the future, doesn't mean you need to file today, even though you might be able to exercise influence over that organization. And then creditors, okay, if we're talking kind of straight debt arrangements where a creditor is just owed money and they can put pressure on an organization, that doesn't necessarily mean that they have to file or that they have to be disclosed in that ownership report. With everything in the law, there's exceptions to the exceptions, okay, so unless you've taken the time to look through the guide or look through the statutes and the regulations, don't assume that you qualify for an exemption, okay, and we'll talk about why assuming in this particular sphere would not be advantageous, okay. Let's see here, so another question that's important to address is, well, does my company even need to file a beneficial ownership report, okay? Not all companies have to file them, okay? You have to be considered what's called a reporting company and not qualify for an exemption, okay? Having said that, virtually all companies would qualify as reporting companies, okay? So it's any company, if it's a domestic company, right? If it's a US-based company, corporations, LLCs, or any other business association that files with Secretary of State, Department of Commerce, whatever their state organization is that handles those types of filings. Okay, so in Utah, that's the Commerce Division. Okay, file with them. That includes corporations, LLCs, limited partnerships, things like that. Yes.
Are nonprofits included?
Nonprofits.
Sorry, go ahead.
Oh, our slides got messed up, but there is an exception for nonprofits. Okay. Foreign reporting companies, I'm just going to touch on. Okay. So if you're a company that's organized outside of the United States, but you're qualified to do business in the United States, you're also subject to the reporting obligations of the Corporate Transparency Act. So your takeaway from this should be virtually all companies have to file this, okay? All right. So our slide's a little wonky here, okay? But these are some of the different exemptions here, okay? And there's 22 exemptions altogether. And the underlying kind of theory here, or a way you can kind of think of whether you're potentially exempt, is if you're disclosing beneficial owner type information to someone else, okay? So for example, if you're a company that is a public company and you're registered under the Securities Act of 1933, okay? You are filing reports with the SEC that discloses the ownership of your company, okay? So you're already doing those things, okay? If you're a bank, a credit union, okay, or another type of depository institution, same thing. You're reporting to someone that type of information, okay? So again, the underlying theory here is if you're reporting this in another way, we don't need you to do it twice, okay? There are a couple of exemptions that don't necessarily fit into that box, and they're exemptions that potentially are applicable to normal people. Okay, one is what we call large operating company exemption. Okay, and the idea there is if you're a company that employs more than 20 people and you have more than $5 million in revenue, depending on how you report on your taxes, you might be exempt from the reporting requirements. Inactive entities as well. Okay, so if you have a company that hasn't had operations for a couple of years, might not necessarily have to report, okay?
Can I ask a question?
Yes.
So if you have like an LLC maybe you're not like actively using but you still renew it every year, would you need to report on that? Or are you saying since it's not?
Since there's no business operations, right, you might have what I might call like a shelf company, okay? You've formed it, you keep its registration active everywhere, and it just sits on the shelf until you're ready to use it, but it's not transacting in any way, you're not really doing anything with it, it would likely be exempt. Never assume you're exempt, okay? Why? Because the penalties for not complying are pretty steep on this, okay? $500 a day per day that you're late in your filing, maximum fine of $10,000, okay? So pretty significant there. The senior officers can be held personally liable if they're found to be an obstruction in getting the report filed. And if you're actively trying to avoid the filing or preventing the filing from happening, either because you're not disclosing the information that you need to so the company can file, criminal penalties up to 2 years in prison, okay? So it's pretty hefty stuff here. So I've convinced you that this is a real thing, that you need to make your filing, so what information do you need to file? Most of this is likely information that you have ready or could pretty easily obtain, okay? So for the company, you need the legal name of the company, any trade names or DBAs that it's operating under, its complete current US address, what jurisdiction it falls under, okay? So if it's a Utah company, right, that's state of Utah would be the jurisdiction, and then the tax identification number, okay? So stuff that's pretty easy to get. In terms of the beneficial owners, okay, again, pretty simple stuff. Full legal name, date of birth, complete address, a unique identifying number, we'll come back to that in just a second, and then a photo ID. We're still looking for some clarity on the unique identifying number, right? Kind of our gut check on that was, oh, they're talking about social security numbers or potentially like a driver's license number. What we're learning is that when you make this report or when you try to make the report, FinCEN's gonna assign you a unique identifying number through FinCEN, and that might be the number that's being referred to, but we haven't gotten the clarity on that. So that's the type of information that's gonna be gathered. You'll notice that what you don't have to gather is the ownership percentage or why someone is being reported. FinCEN doesn't care the why, they just wanna know the who so they can start connecting dots, right? So when do I need to start worried about this? The reporting rule starts on January 1st, 2024, okay, meaning businesses have to start making this report start of next year. Existing companies, so any company that exists before January 1st has the full year to make the filing, okay, so as long as they do it by no later than January 1st, okay, then they'll be considered to be in compliance. But companies that are formed after the 1st have 30 days to make the filing, okay? There has been a recent proposed change to the rule to give businesses 90 days to make the filing. I didn't check today, but the way administrative agencies work, how rulemaking works, it'll be right at the deadline that we'll know whether that rule gets implemented or not. So how do I make my filing? What we've been told is that there's going to be an online portal, okay, that FinCEN will have a portal where you'll make this filing. They assure us that it will be ready by January 1st, 2024. A lot of us are skeptical, okay, and if you look into the way appropriations for this have been done over the last couple of years, there's been not a lot of funding toward it, and so we'll see, okay. A question I get often is this a report that needs to be done annually? How often do I need to disclose this information? Okay, you just have to make an initial report, okay? And if nothing changes, then you don't ever have to update it. But if there is an update, if you get a new beneficial owner, then you have 30 days to report the change, okay? Yes?
Current, or do you have to backdate and do like previous beneficial owners?
You would just bring it up to date. Yeah. Okay. I've had a couple clients. This sounds complicated. Can you help me? Okay. Yes, we can. We're excited to announce something that we've been working on for a while here, and that's something called Elysium Business Solutions. Okay. And so we've got individuals trained on the Corporate Transparency Act who can help you identify if you need to make a filing, who needs to be disclosed in your ownership report, and then go ahead and make that filing. Okay. We're charging $249 for your first entity, okay, and $99 for each entity after that. And so we're happy to provide that service. Anyone who signs up, now we'll start gathering that information, and then we'll start making filings the first of the year.
Got a client that has several LLCs, rental LLCs that he files under one. Does he have to, for each one?
Yes.
Okay.
Yeah. For situations like that, we'll always check for relevant exemptions, but our understanding right now is if you've got a holding company with 9 entities under it, you're gonna make 10 reports, okay? So, in addition to offering services for the Corporate Transparency Act and helping you stay compliant there, kind of the flagship offering we have with Elysium Business Solutions is this little guy over here, okay, this legal health report, okay? So what we're offering is for clients to come in, for us to sift through all their legal documents, okay? We'll look at every single thing, okay? And just make sure that you've got all your ducks in a row. And what you would get from that is basically a report that says, this is how you're doing in this area, okay? This is how you're doing with your compliance. This is how you're doing with how you set up your entity. This is how you're doing with how you're working with your employees, things like that, okay? And then, if the report is disclosing things that need to be adjusted, we offer some subscription services where you can pay an annual fee and have access to law-trained professionals, documents to kind of shore up those things that might be deficient. Okay. If you have, yes?
So you had said earlier about FinCEN having a portal open. Is that the only way that you file? Or are there paper filings? Do you mail in, or is it just?
As far as, so they've only talked about the portal. We suspect that they'll have a paper method, just because that's still a necessity for some people. We haven't seen a form. We haven't been provided any instruction.
I haven't seen one either.
There's been a little bit of a hint that on January 1st they'll potentially provide a way to file non-electronically. But we'll see.
Yeah.
So some things, like 1023s, right, you always have to do electronically is my understanding. And so it's possible that I can foresee a scenario where they don't build out a way to paper file. So, if you have questions, here's my information. Okay, that's my direct line and my email. You can reach out to me about Corporate Transparency Act. You can reach out about Elysium Business Solutions or anything else. So, yes.
Just curious. It seems like you kind of almost came across this CTA. How does FinCEN just plan on like disseminating information to let everybody know they need to get this done?
Yeah. So so I found out about a year ago. Okay, I was at a securities conference and I was very checked out. Okay, because it's securities and it's not terribly interesting. And presenter goes up and he gives kind of a similar presentation, and that was kind of my knee-jerk reaction is nobody knows about this and everyone needs to, right? Thus far, I haven't seen any informational campaigns on any level from federal, from FinCEN, from the state, and so the short answer is seems like budget hasn't been apportioned for that to happen, and so that's where we're trying to step in as attorneys, as professionals, to get the word out, to make sure people don't get fined $10,000.
Just wondering the urgency. If they're not putting a lot of effort to let people know.
Yeah.
What's the urgency behind really getting?
We suspect, this is just, I suspect that there'll be a lot more outreach Q3, Q4 of next year. Yeah, that would be my guess. I also wouldn't be surprised in Utah, the way that you can, kind of incorporate or file your LLC online. They have kind of a one-stop. I suspect that they will build ways to integrate with, or give you some kind of notice that you need to make a beneficial ownership report filing.
You haven't seen anything on there yet?
No.
Right?
No.
Yeah, I would think that they would give you some informational blurb at least.
Yeah. One of the interesting things I did notice today, and this just tells me that people are starting to learn about this, is one of the software providers that we use to produce documents. I was drafting an operating agreement today, and it had an option. Do you want to include a provision that says the owners and the managers of this LLC have to provide information so a beneficial ownership report can be filed? And so word is getting out, things are changing, and I think we'll see a lot more of that when this actually kicks into effect next year.
Was that on Month Council?
Yeah, my sections didn't line up where I thought they were going to be, and I noticed that they slipped that in there. So, yeah. Dallin, do we have any questions from the chat?
No.
Okay.
So in other words, there may not be a lot of urgency unless you get caught. If you're in trouble with the IRS, they're going to look at it. Like if you're already in their system for something else, they're going to look at that and find a way to find
Yeah.
if you're in trouble.
I think a lot of us have been a little bit skeptical on the motivation or the rationale behind passing this. And I think, of Al Capone, who went to prison for tax evasion, right? He did all these terrible things and they nailed him on taxes. And I wonder if this is something that will be used in that kind of circumstance. Well, we can't quite pin you down, but you didn't make your ownership report. So 2 years in prison while we continue to investigate, kind of a thing. So we'll see. So, any other questions? All right.
I have a question.
Okay.
Sorry, we're gonna get to the thank you slide. What are the biggest, the biggest mistakes that someone will make on this? So if a do-it-yourselfer like myself, is trying to do it, like what potential things am I going to do wrong that, like, land me in prison?
So land you in prison, probably not anything. Okay, people who are making.
Worst case scenario
Uh-huh.
person, so. She just saw the
So generally speaking, when we're talking about criminal action, we're often talking about like a knowing intent to not obey the rule, right? You have to have some type of knowledge and desire to not be compliant. And so for people who want to be compliant, okay, we're probably not talking prison, okay? But a $10,000 fine is also not very fun, right? Okay. So the most likely way you're going to get in trouble is, one, you don't make the filing, okay? You set up your LLC, you think, oh, I'm going to go do this, and then you're a business owner, you're busy running your business, and so you forget to do it, right? So that's kind of the number one thing. Number two, I think, is probably running into scenarios where it's difficult to gather beneficial ownership information. You have a partner who's on vacation, or they're otherwise not available, and you try to justify why they're not a beneficial owner, okay? Again, kind of going to that, well, his spouse is involved in the business, and so he really doesn't own 25%, he owns, again, 12.5% or something like that, okay? And so those are kind of the things that I can see my clients trying to tell me.
So, yeah, I guess knowing that there are like some things that you can just maybe like input wrong, like working with like Elysium Business Solutions, like how does that kind of cover my basis to ensure that it gets done correctly?
So the big part of it is, you know, if you want us to handle it, right, we're gonna sit down with you, and whether that's in person or over the phone, and we're gonna run through like all of that stuff, okay? Who are the owners, okay? I wanna know who all of them are, not just the ones that are over 25%, okay? Tell me about this person and the role they play, okay? Is there anyone else that kind of has your ear and is influencing this business, okay? And so just kind of, you know, what our role is to protect you from yourself, okay? Knowing how these types of concepts have been applied in other parts of the law, specifically in the securities realm, where we file similar types of things, and we've seen all the arguments about I should or shouldn't have to report. And so I think that's the big, you know, area of expertise we have, is dispelling that smoke that often is the client that's creating.
Gotcha.
Okay.
And so, if I am interested in having you help me do those, like, do I just email you, QR code, what's the best way to go about that?
So all ways are fine, okay? So there's a QR code on the handouts that we have. This QR code on the slide deck will also take you to a form to submit your information, and then one of our Elysium business professionals will reach out to you. You can also call me, you can shoot me an email, and we'll, you know, direct those inquiries to the right people.
Awesome, thank you.
Anything else?
So if you're not sure if someone's a beneficial owner or under that, then should you just report anyways, or like is giving more information bad?
There's nothing wrong from reporting more from are you going to get slapped on the hand for kind of confusing the issue? We don't think so. Okay, we haven't seen anything that says if you report 900 beneficial owners, then we're going to scrutinize it. It's more of a personal, you know, privacy type of a thing. That's the resistance that I've come across. Is I have clients who specifically form businesses in ways that preserve their anonymity, and they're not thrilled by the fact that they're going to have to disclose their ownership anyway. They don't seem very assured by me telling them that FinCEN has said that this won't be public, that it won't be subject to FOIA requests, and so that's what I have to say about that.
So,
Yeah.
so if you're an employee and you have a lot of influence in the business and like what's gonna happen, you should report if you're just an employee.
So first off, remember it's the company that has the duty to report, okay? The control person does not have the duty, okay? They have a duty to work with the company if the company deems them to be a control person to get it done. Right. And the employee exemption is probably one of the squishiest ones, okay? And again, it's brand new. We don't have a lot of clarity on it. But the common take on it right now is even if you are an employee that has a lot of influence, unless you are in one of those roles that has actual authority like the CEO, CFO type of a thing, your duty, the obligation to report you is probably not there. Yeah.
Another clarification, for those who are existing businesses, they're not due January 1st, 2025. They're due before then, is that correct?
On or before the 1st is what we've seen. December 31st is the last day that I would feel comfortable saying that you can file the report.
She's saying if I started a new company
No,
this year.
no. If I
Existing
started
company.
doing This year, then it's 30 days. Yeah.
No. Sorry.
But
Let's.
we don't want business to say, oh, well, it's not due until then, because you know when everybody will be coming in.
Yeah.
So the price goes up.
I'd say it'll be tax season all over again, but for and certainly we suspect that obviously as attorneys, as kind of law professionals, we feel like this is our domain, but we know that CPAs will get up on it, enrolled agents, people who deal with businesses on a regular basis, and yeah, we expect to see again just a rush of these coming in November, December of next year. Yeah.
Do you think that they'll do TV advertisements for it, or is it that big of a thing? I mean, enough businesses or what,
I don't think so. I don't see that happening. And again, it's mostly a political game where the power of the purse, resides in Congress that doesn't want to do anything. And so I just don't see anything being allocated for it, quite frankly. Yeah.
They don't waste money.
No. And heaven forbid they waste a few million bucks on telling people about this, right? Maybe they're motivated to collect some fines. But
I believe that.
I do just want to make sure that this point is clear. So any existing businesses, any business formed up till December 31st of this year will have all of next year to make the filing. Okay, 365 days to make the filing. If you form your business January 1st and thereafter, you have 30 days to provide your initial report. Okay, so the businesses that we expect to be making these filings will be new businesses, Q1, Q2, and then as the word gets out, as that deadline looms, Q3, Q4, we expect a lot of existing businesses to come knocking.
Maybe Fenson will have their portal up by then.
That's, we can only hope, right?
Yeah.
So, yeah. Any other questions?
So Paden, as
Yes.
you help create companies into 2024, are you building that into your process of just filing that as the entity's created?
That will be how our workflow is adjusted once we can actually make the filing. So yes, we'll start asking for photo IDs as part of the formation process. Yeah, that's right. Yeah. That's really the only piece of information we don't gather already. Yeah. Other questions? All right. Well, thank you. And again, if you do need help, we've got brochures with QR codes to sign up to have someone reach out to you to help you out with your filing.